hello. Remember to drop your affirmations in the chat and where you're calling from. This is Be Your Own Bank worldwide. Back to the basics. We are the largest economic empowerment movement in the history of mankind. And we want you to know what our affirmations are. I am a master trader. I am a BYOB master trader. I am the signal. I am 777. All my trades end in profit. I am a billionaire. I am anointed for wealth. So you definitely want to add those affirmations to the chat. Remember, add to them, but never take away from them. We need to create our future now. Great evening, great evening, great evening. Welcome, welcome. Great evening from Columbus. Great evening from Jacksonville. Welcome, welcome. We will begin in just a couple of minutes. I'm excited, you all. I'm excited. As you log in, drop it in the chat where you're calling in from. Hello from Tavares. Welcome, welcome. I am an educated BYOB master trader. I am economically unbothered. I love it. I am a change agent. Yes. I am bold. I am confident. Absolutely. As you log in, drop it in the chat where you calling in from. This is back to the basics. Be your own bank, where you get the strong foundation to build upon. Great evening from Tulsa. Welcome, welcome. All right, ladies and gentlemen, my name is Tanya Anderson, and I'm excited to be here with you all this evening to share with you the foundation of the Be Your Own Bank platform here, the Be Your Own Bank Cashout that was created by the trade whisperer herself, Miss Tasha M. Dyer. So we're going to dive right into the information. This is our BYOB dream team. And I believe that when you start in the endeavor, you want to understand why you're doing what you're doing, but you want to understand where you've come from and who set the foundation, who set the stage for what it is that we're doing. And we have the visionary himself, Mr. Gerald D. Rogers, who created this movement, the BYOB movement. And he has a tremendous background, ladies and gentlemen. He has 25 years of investment banking, mortgage lending, real estate development. He is a business success coach and mentor. He's a minister. He has a huge heart. I'm privileged for him to be my personal coach and mentor, because every single day he's stretching us to make sure that we develop ourselves in such a way where we are able to leave generational wealth and teach others how to do the same. He's co-authored 2 books as well. So we are in the right place at the right time with the right people. And then we have none other than Miss Tasha M. Dyer, the trade whisperer, creator of the BYOB Cash Out strategy. She is a retired major from the United States Army. She has a license. She was a licensed financial advisor prior to this. She's an MBA recipient, Clay County Officer of the Year. She does it all. She wears all the hats. She's a mom, a grandmom. She's a marketer. She does it all. And what I love about her is that she shared her strategy that she created with all of us to simplify something that has been made complex. And we are able now to do what big banks do from the comfort of our home because of Miss Dyer. We love her. We know that she's going to be, leading the charge for a long time to come, because she's creating right now a university where we'll be able to, have people for years and years, generations, get involved with that university and learn this skill. And then we have Dr. Craig Bythewood, the finance doctor. He has his PhD in finance and economics. He has been a consultant to CEOs and CFOs of major Fortune 500 companies. He is a CFO. He's been a CFO himself. He's an educator. He's a professor. He's a coach, a success coach as well. He's a girls basketball coach. He's a loving father, and he avails himself to us twice a week to share with us information that we would have never been able to understand traditionally about economics and finance. He's done his dissertation in bank mergers and acquisitions, and he will answer any financial question that you can think of free of charge, because of his background and huge heart. So that is our BYOB Dream Team. They call themselves the Mastermind Team, but I call them our Dream Team. And we know that with any great mark of leadership is duplication. The purpose of leadership is to replace yourself. And so we have our second generation of educators. We have a phenomenal lineup with Mr. Antoine Sims. You know, he has a background as a retired regional vice president in the restaurant industry. He generated hundreds of millions of dollars in that space, opened hundreds of restaurants across the country, trained hundreds of people in the management positions to run those restaurants. He has a huge heart, a caring spirit. I had an opportunity to spend time with him this past weekend, and it's like we're old brothers and sisters, like we've been together before. I mean, he just accommodates like you wouldn't imagine. And so if you have an opportunity to work with or learn from Mr. Sims, you are in definitely great hands. And then we have Ms. Tritana Perry. She is our crypto igniter, and excuse me, Mr. Sims is our indice precisionist. So he's a master at the indices. And then we have Ms. Tritana Perry. She's our crypto igniter. She is our cryptocurrency educator. You know, she has a background in insurance over 31 years. She's a missionary. She has taken her church by storm, and she's teaching countless people how to cash out on a daily basis, changing lives, changing generations. And then we have the trading diva, HFX sniper, Miss Bonita Brantley, project manager by day, trading diva during the day, at night, midday, 24 hours a day, impacting and empowering us so that we can go in and capitalize on those high frequency trades, those binary options. And then you have myself, Ms. Tanya Anderson. I am the pip master. I am responsible for the BYOB basics, making sure we lay that strong foundation. My background is 25 years in this space, in this industry of network marketing. I've been blessed and fortunate to be featured in Success from Home magazine on 10 different occasions. And our organization, our business, generated over $75 million in sales over the past 25 years. But I'm excited to be able to be a part of this platform so that we can help everybody who has the desire to be their own bank. This is the right time. We're in the right place. And guess what our product is? Money, currency. Everybody has some, everybody wants more. So we're showing everybody how to be their own bank. So Be Your Own Bank is the largest economic empowerment movement in the history of mankind. See, when you're part of a movement, when you're creating history, you really don't understand the power behind it when you're right in the middle of it. History books will write about what it is we're doing. History books will write about the fact that we have created more millionaires, more billionaires than any other organization around, and we've seen other powerful movements, and we're reaping the benefits of those movements, the civil rights movement, women's rights, etc. And so generations to come will reap the benefit of this movement, and it's the first and largest economic empowerment movement in the history of mankind. And our vision is very clear, it's crystal clear: 2 million families financially educated, empowered, and impacted by March 28th, 2022. How we're going to do that? We're going to help people enroll in the academy, learn this skill, learn the difference between trading and investing, and take profit. So it's very simple. We enroll, we learn, and we profit, and we repeat. So again, 2 million families financially educated, empowered, and impacted by March 28th, 2022. So affirmations are so very important. And the reason that they're so very important is because everything starts with words. So I want you to look around your office if you're sitting at your desk. Look around your car if you're sitting in your car listening to this. Look around your environment right now. Everything that you see around you in the physical first started with a thought and then a word. And so we want to make sure that we start our day and throughout the day, we're affirming what it is we want and what we ultimately desire. See, we don't ever want to utter any words that we don't want to materialize. So affirmations are the key to good vibrations. And here are foundational affirmations. I am a BYOB master trader. I am the signal. All my trades end in profit. I am an educated trader. I am a profitable trader. I am 777. For those of you who are new, 777 simply means that we are taking profit out of the market. I am anointed for wealth and I am a billionaire. And so if you are new to this call tonight, I want you to drop a 111 in the chat so that we know who we have on the line. If this is your first time being a part of BYOB in this call, I want you to drop a 111 in the chat. And if you've been here, you're still learning how to cash out, I want you to drop a 222 in the chat. 111 for new individuals, 222 for those who are still perfecting your skill and cashing out. Excellent, excellent, excellent. So we want to make sure that we take our affirmations very seriously. It starts with belief. When we have a positive mind, we'll have positive vibes. When we have positive vibes, we will live a positive life. And so with that being said, we want to dive into these important terms that we want to understand as we are learning this skill. The first is that of an indicator. What is an indicator? An indicator is simply a tool used to predict future prices in this space. We have indicators all around us in different arenas, but in this space, it's simply a tool used to predict future prices. So we want to make sure that we understand that the three indicators that we use in this strategy is the stochastic, which is our leading indicator. That means that this is what bosses us around. This is what we're going to look at first when we're diving into the charts, analyzing our trades. The stochastic measures the momentum of price, and it gives clues about trend shifts. It's also used to indicate when an asset moves into an overbought or an oversold position. That is your stochastic. Then we have the Hikinashi candles. The Hikinashi candles are our lagging indicator. These are trend candles that help identify whether the market is pushing an asset's value up, down, or sideways. Just remember what goes up must come down, right? So when we're looking at price, we're looking at the trending prices that are either going up, down, or when there's consolidation, you will see price go sideways. Then we have the parabolic stop and reverse. This is also a lagging indicator, a dot or a small cross that outlines candles used to determine stop loss, entry, and or exit points for a trade. It's also considered a dynamic support and resistance line. And so these are the important terms. Make sure you write these down, take a screenshot, because an educated trader is a profitable trader. And I love when Dr. Bythewood says, when you know what you're doing, you'll always have a job. But when you know why you're doing what you're doing, you will always be the boss. So if you're a boss tonight, I want you to drop boss in the chat. B-O-S-S, boss. We are bosses. We are bossing ourselves around. We are taking these trades so that we'll never, ever, ever have to report to a job if we don't feel like it. B-O-S-S, let's boss ourselves around in the market. All right, so here is the strategy broken down. It's as simple as 1, 2, 3. It all started with the IML web analyzer. However, this is now the Vibrata. But we want to make sure that we understand the 3 easy steps. And I like things that are simple and easy when we are evaluating our trade. So number 1, you review the stochastic. Remember, that is our boss. This bosses us around. This tells us where price is headed, where it's been, where it's going. Then we have the Hikanashi candle. You review that second. And then thirdly, you review the PSAR, the parabolic stop and reverse. So when we're analyzing trades in the market, we're looking for either a buy or a sell. A sell indicates price is dropping. A buy indicates that price is raising. It's going up. And remember, what goes up must come down. So we can take profit either way. That is the beauty of this strategy, because in investing, you're taught to purchase something and wait. You want it to always be increasing in price. And then you typically wait for 10 years, 20 years to make a withdrawal, hoping that you end up with your goal amount. Well, in this, ladies and gentlemen, it doesn't matter if price is going up or down, you are able to take profit. So when you're looking at a sale, when you're evaluating an asset where price is dropping, then you want your stochastic to be hovering around the 80 marker, all right? And then you want your blue line to cross over the red line in a downward momentum or downward position. And keep in mind, when that stochastic line is above 80, it's a stronger sell. When it's coming down from above the 80, it represents a stronger sell. And we'll show you what that looks like live in just a moment. Then step number 2, you want to review the Hikanashi candles. So with a sell, with price dropping, you're looking for a red candle with a flat top. You're looking for a red candle with a flat top, just like the one you see to the left of these 1, 2, 3 steps. All right. And so it indicates a strong sell when it has a flat top. And then when there's a wick forming on the top of the candle, it indicates a trend reversal. So that means that if you see a wick begin to form at the top of the candle, soon you will go from a sell to a buy. And then you have the PSAR, and these are dots that travel above the red candles. When you see the PSAR flip, which means they are traveling below the green candle, but once you have the red candle with the flat top and a PSAR that appears above that red candle, when this trend reverses from buying to selling, then that's when you know there's momentum in that price going down. Now, when you're identifying a buy, when price is increasing in value for the asset that you're analyzing, then the stochastic is going to be hovering around the 20 marker. It's going to be hovering around the 20. We'll show you that live in just a moment. And then what are you going to look for? The blue line crossing over the red line in an upward momentum, upward position. When those lines are below the 20 marker, it represents a stronger buy because it's coming from a lower place going up. And then the second step, you want to review your Hikanashi candle. In this case, because price is increasing, you're looking to identify a green candle with a flat bottom. This indicates a strong buy when it has a flat bottom. Now, when a wick begins to form on the bottom of the candle, then you know that that's indicative of a trend reversal. It could turn around and start selling. Step number 3, identify the PSAR, the parabolic stop and reversal. This adds extra confirmation. So when that PSAR dot appears below the green candle with a flat bottom, then you know that that's indication of momentum and price increasing, which is the good setup that we're looking for. So that is the BYOB cash out strategy. It is as simple as 1, 2, 3. All right, so now what I'm going to do is transition. I am going to go live. I'm going to bring up our tool, the Vibrata. The Vibrata is a tool that allows for us to be able to analyze any asset just like big banks do with our money when we make deposits in the bank. And so again, when we are looking to analyze our assets, we're going to be using the tool, the Vibrata, and this is what you will see when you open up the tool. So what I love about this platform, what I love about our team, our family, our BYOB leadership team, is that we have the visionary, Mr. Gerald D. Rogers, who's actually the spokesperson for the Vibrata. See, the co-founders of iMarket saw so much value in Mr. Rogers that they had him open up. And there's a video that opens the Vibrata describing why this tool is a premier tool and why we should be very grateful and consider ourselves fortunate to have access to intel like this so that we can make moves just like big banks. So when you open up your Vibrata, check out that video. We operate in 122 countries. So 24 hours a day, 7 days a week. When it's today somewhere, it's tomorrow or yesterday in another place. And you see Mr. Rogers is worldwide. So we're blessed and fortunate to have him as our visionary. So we're going to go to the app itself. I love the sound of that cash out, that cha-ching. If you love that cha-ching noise, I want you to drop a 888 in the chat. If you love to hear cha-ching, I want you to drop that in the chat. Now, what I want to do is show you how to utilize this tool in the best way possible. So when I got started in this journey of trading, I had no idea what I was looking at. It looked so foreign to me, but I knew if one person learned how to do it, I could too. And that needs to be your attitude. If one person has done it, you can too. You're teachable, you're coachable, right? And so when we open up the Vibrata, what we see here to the left, these are triggers. When you see these triggers, is letting you know what's moving in the market. So these are ideas. These are prompts that is given to us so that we don't have to wonder what to evaluate. We have all sorts of triggers here to the left. So here at the bottom, you see your options. You can choose to have triggers that are Forex pairs. You can choose cryptocurrency triggers or alerts. You can choose indices or metals. And then you can type in any asset here on the top left-hand corner of the Vibrata. You can type in stock symbols. You can type in whatever it is that's traded or exchanged in the market. You can analyze that asset and take profit, whether the price is going up or down in value. Now, at the top of the chart, you'll see here, these are time values. So we have 5-minute, 15-minute, 1 hour, and 4 hour. We pay attention to the 5-minute chart, the 15, and the 1 hour as beginners. So that is what you want to pay attention to. And I'll explain those time periods in just a moment. And then here on the right side of the chart, you have price. So I'm just going to click on this particular trigger that happened 8 minutes ago. And it's a currency pair, GBP CAD. It's the British pound, Canadian dollar foreign exchange pair. So on the right side here, this is the actual price of this currency pair. And so when you see this, you see price moving, the red rectangles with price included inside of them. You see these moving up and down. That's an indication that there is liquidity in the market. Now, these triggers simply let us know, okay, price is in a consolidated area. So you want to make sure you are able to catch the movement of price once it breaks out. And so we're going to teach you the strategy behind identifying price when it's time for you to take a trade. So let's talk about the bottom portion of this chart. You see the time and dates, because historical data represents where price has been and where it's going. It's very important in our analysis to understand what we're looking at to the left. But I also want you to understand that current price, so we're looking at the far right of this chart to start our evaluation or our analyzation. This candle here, this Hikanashi candle that you see, this is the live candle. What do I mean by live candle? This is the candle that we're watching in order to determine if we should execute a trade. This candle, this point of the stochastic, and the PSAR. So when you see this countdown timer here, it's letting you know that here you're on the 5-minute chart, which means that each one of these candles represents 5 minutes that has passed, right? This timer shows you that in the next 4 minutes, you will see a new candle appear to the right of this current candle. So we analyze on the far right when it's time to figure out if we should take a trade. All of these candles here to the left represent historical data. All right. And so let's talk about the 3 indicators that allow for us to understand what price is doing. So again, the stochastic. This is our leading indicator. It bosses us around. It lets us know where price is headed, where it's been, where it's going. And so you want to make sure that you understand what you're looking at when analyzing the stochastic. So here we see the 100 and the 0. This is where the stochastic travels, but we pay close attention to the area between 20 and 80 that you see shaded here in purple. And I like to think of these numbers as mile markers, because when you're driving on the highway, you go onto the highway on the entry ramp, the first thing you're going to see to the right are mile markers, right? They tell you where you are and how far you've traveled. It's similar to the stochastic. The stochastic tells us where price has been, and it tells us where price is going. So the 2 terms that you want to understand, one is overbought and one term is oversold. So you want to make sure you jot those terms down. What does it mean when price is overbought? I'll give you an example. So when price is around the 20, let's just take here. The price here is below the 20. So this line at the bottom of the purple shaded area is the 20 marker. When the blue line and the red line are below the 20, that means that price is headed down and now it's oversold. So when price starts at the 80, moves down, travels below the 20, we call that being oversold. Okay. Now, when price is moving upward and it's buying and it reaches the 80 marker, exceeds the 80 marker, we call that being overbought. So remember, when you're selling, price is going down, it's decreasing. When it's buying, price is increasing and heading up. So when price is oversold, the blue and the red line are below the 20 marker. And when price is overbought, the blue and the red line are around or above the 80 marker. It's above the 80 marker, okay? So what does that mean to you? It means that when price is oversold below the 20, you are going to be waiting for price to turn around and begin to buy before you execute a trade as a beginner. Okay? Because you're waiting for that momentum to begin. Now, when price is overbought, let's look here. This is a good example of price being overbought. It came all the way up past the 80 marker. Now, what are you doing? You are waiting for price to reverse and begin to decrease in value, because you want to ride the momentum of the market. So you want that stochastic to be around the 80 or around the 20. Any questions at all about overbought or oversold? When price is overbought or oversold, do you understand what that means? The reason we want to make sure you are crystal clear is because we are still in the month of July. This is our Independence Month, and we are all focused and determined to build our trade accounts to 6 figures in 6 months. Why? Because then we will have options. We can opt to go to work, or we can opt to stay at home and trade and have a lifestyle of freedom and choices. So any questions about overbought or oversold? All right, so that is step 1. In our BYOB cash out strategy, you identify where the stochastic is located in the market. So what I'm going to do is make sure that I emphasize that you want to pay attention and start your analyzation on the 15-minute chart. This is where we live, on the 15-minute chart. Okay, so now let's pick out some trade setups so that you all can understand what to look for when you're analyzing a trade. So look at this stochastic right here. Let me make this a little bit bigger so we can all see. Cha-ching, I love it. Drop a cha-ching in the chat if you are excited about cashing out. 777, cha-ching. All right, here we go. I like how this looked. So let's look at what happened here. All right, so we have the blue and the red line around the 20. Now remember, it doesn't have to be precisely on the 20. It doesn't have to be below the 20, but around the 20. You're looking for the blue line to cross over the red, heading in an upward momentum. That is step number 1. So when the blue and the red line are around the 20 heading up, we know that price has sold and now it's about to buy, okay? What comes down must go up. So here's our first indicator. It's our leading indicator. It is our boss, right? So now the second step is to identify a green candle with a flat bottom. So if we go up above here, we see that we have a green candle with a flat bottom. However, it does not have a P-star below it. So it is not time for you to take that trade. It is not time for you to take the trade. You want to make sure that you have a green candle with a flat bottom and a P-star, okay? You want a green candle with the flat bottom and a P-star, which is this small dot that travels beneath the green candles. So what I'm going to do, because we want to check for confluence on the 5-minute chart and the 1-hour chart, I am going to drop a blue arrow for the sake of educating and instructing right here. Now, when you're trading live, you don't need an arrow because you're going to be live and it's going to be the last candle to the right of the price. I'm sorry, to the left of price. So you'll know exactly where you are in the market when you're trading live. But we're doing an analysis of what happened in the past. So we want to make sure when we jump from the 15-minute chart to the 5-minute chart in the 1 hour, we are looking at the same moment in time in history. Okay, so here we have the stochastic crossed over. However, we didn't see a green candle with a flat bottom and a P-star beneath it until the stochastic got here to this point. And that's okay because it's still pointing upward. The blue and the red line are still pointing upward. All right, so now what are we going to do? We're going to drop down to the 5-minute chart and we are going to look for our arrow. So we identify the arrow, right? But the first thing we want to do is look at our leading indicator, the stochastic. Remember, that's our boss. So as long as the red and the blue and the red line are traveling upward, pointing upward, we have confluence. So if you look at the blue line and the red line, they are pointing up at this particular area where the arrow is dropped. So we do have confluence there. We have a green candle. It happens to have a P-star beneath it. So it's buying. So now what do you want to do? You want to look on the 1-hour chart and you want to identify your arrow to see what price is doing on the 1-hour chart. So here we are on the 1-hour chart. We're gonna look for our blue candle. We're gonna look at the stochastic to see what's happening here. So if we go down here, we see the blue line is pointing upward, crossing over the red. So that tells me that this is buying. We have a green candle here. So guess what? That is a great entry for the trade. Let's go back to the 15-minute chart and see what would have happened had you gotten into this trade. How many pips would you have been able to take? Well, we're going to focus on 10 pips and cashing out, but I want you to see how many pips this price traveled to for this particular buy. So here is our measuring tool. It looks like a ruler. So you're going to click right here where you have the green candle with the flat bottom and just drag your cursor up to the top, the highest green wick that you see here. Guess what? That was over 145 pips. So 10 pips and cashed out definitely would have occurred because you had the proper analysis with the 1, 2, and 3 steps that we talked about, the stochastic, the Hikanashi candle, and the PSAR. Any questions, comments, testimonies about that setup? Questions or comments? Anybody look? We still look for the flat bottom candle and the PSAR on the 5-minute. No, it doesn't have to be a flat bottom candle. The stochastic just needs to be pointing up. We need to see a green candle, and it does not necessarily have to have the PSAR. Those 3 things are mandatory on the 15-minute chart, but as long as on the 5-minute chart, it looks like it's still buying with the stochastic being your boss, telling you, yes, this is pointing up, and then you see a green candle, you're good. Does that answer your question? So it just has to look like. And then can you explain what to look for on the 1 hour? On the 1 hour chart, you are looking for the stochastic to be pointing up, and you're looking for a green candle as well. You don't have to have the PSAR underneath the green candle, but you want the stochastic to be pointing up, and you want a green candle. So it just looks like it's heading into a strong buy. The strong meaning that the stochastic is pointing up. You are welcome. So now we're going to identify a sale. But before we do, I want to share with you what to look for when you're setting your stop loss. Because when you enter a trade, you must have a stop loss to protect your money, your asset, your currency, right? Because if the trade does something you were not expecting it to do, then you don't lose all of your money. So here we have the green candle with the flat bottom. We have the PSAR. So what are we going to do? I'm going to move this arrow so you can see clearly. I am going to place my cursor below the PSAR. I don't want my cursor to touch the PSAR. I want my cursor to be below the PSAR. And then I'm going to look to the right. The price you see in that gray rectangle, that is going to be your stop loss. So it's 1.73050. That is your stop loss. That is what's going to allow for you to ride the wave of the movement of price, staying into the trade until you get your 10 pips and cash out. Any questions about the stop loss? Any questions about the stop loss? How do we determine a good buy trading live? Well, let's talk about it. Trading live. Well, here we go. This is a perfect example of a watch trade, a trade to watch for a buy. The reason I say that is because you see the stochastic, it was oversold, boom, and now it's dropping, dropping, dropping. The stochastic is now below the 20. So what you're going to do in this particular example is you're waiting for the blue and the red line to begin to head up, right? Then you're going to wait for a green candle to appear with a flat bottom, and this P-STAR is going to flip. It's going to move below from traveling above the red candle. You're going to wait for that P-STAR to flip and end up underneath the green candle that you see with a flat bottom. That will be your cue to check for time frame confluence on the 5-minute and the 1 hour to identify the stochastic buying on the 5-minute. You want a green candle as well. And then you want to have the stochastic buying or facing upward on the 1 hour in a green candle as well. So you go to the end of the last candle you see. You go to the end of the stochastic. This is your first move, your leading indicator. This is what you identify first. You're waiting for these 2 lines to curve up. The next thing you want to wait for is a green candle with a flat bottom, and then a green candle with a flat bottom that has a P-STAR. The trades are not for 15 minutes. The candles form every 15 minutes on the 15-minute chart, but the trade could pan out in 1 minute or 5 hours. We are just looking for the setups on the 15-minute chart. The 15-minute chart simply means that every 15 minutes, you're going to see a brand new candle, but it has nothing to do with the amount of time that it takes for the trade to play out. Did that answer your questions about how to determine a good buy when you're trading live? So you look at the stochastic, you wait for it to cross up. You look for a green candle, flat bottom, P-STAR flip. If the P-STAR flips and there's a candle with a wick at the bottom, no. Wait for it to flip. Wait for the P-STAR to appear with a candle with a flat bottom. All right. Okay, now let's identify a sale. So let's see what else we got over here. Let's go for EUR/AUD. Let's click there and see what's happening there. All right, I like what I see. I like it. I like it. I like it over here. Let's evaluate this. Let's go to the 15-minute chart though. Here we go. Here we go. Come on. Here we go. Come on. You know I have music Tourette's, so you have to bear with me. Name that artist. Dougie Fresh, y'all. All right, so we're gonna look for a sale. All right, so here is a good example of a setup for a sale. Can you move up the profit, take price once you're in the trade? Yes, you can move, you can modify your take profit price when you're in the trade. You can modify the stop loss when you're in the trade. You cannot modify your lot size when you're in the trade. All right, here we go. Okay, so we are going to identify a sale. So here's a good indicator here, starting with the stochastic. We have the blue line and the red line heading downward around the 80. That's a good indication that this is going to be selling, right? So we have the blue line crossing over the red around the 80 marker. That's step number 1. What's the recommended lot size? That is a fantastic question. We are going to go over that in just a few minutes when we get to our compounding chart. Okay. All right, so once you see the stochastic with the blue and the red line heading in a downward momentum, so that's step number 1. Step number 2, we're looking for a red candle with a flat top. A red candle with a flat top after we see the stochastic heading down. All right, so here we're going to move up to the candles. We see a red candle with a flat top here. Now notice that the stochastic is still moving down, right? But we have to be patient and wait for the perfect setup. So even though it moved past the 80 marker, right? Now we're still waiting for that red candle with the flat top and then the P-STAR to appear above that red candle. So this is a perfect entry point right here. So I'm going to grab a downward facing arrow so that we can go and check our confluence, and we will be at the same moment in time on the 5-minute chart and the 1-hour chart. So here's my arrow, cha-ching. I love it. Drop cha-ching in the chat or 777. Every time we hear that, we gonna move. When price moves, you move. So drop a 777 in the chat. Price is moving, we need to move. It's all about conditioning, right? When price is moving, we move. All right, so we have a red candle with the flat top, and we have a PSAR above that red candle. Perfect setup for a trade, okay? So now we're going to check for confluence. We're going to the 5-minute chart. Going to the 5-minute chart. You all would have had a blast in Milwaukee this weekend. We took over the hotel lobby and we were going at it, playing Name That Tune and who could come up with the best song on YouTube. It was a blast. So next time there's an event in Milwaukee, everybody needs to show up. All right, so here we are on the 5-minute chart. So now let's see where the stochastic is facing on this chart. So let's travel down and see, we're in the middle of the arrow. What is the stochastic doing? Well, it's still pointing downward. It hasn't begun to shift up yet. And we have a red candle, which is right here. So that is confluence. As long as the stochastic is pointing down and we have a red candle, just so happens that the PSAR is above the red candle, which is good, we have confluence. Now we're going to look at the 1-hour chart and see what it's telling us. Where the candles, so they're hiding from us. Come on out, candles. All right, so let's find our blue arrow pointing downward. Now, here we are. Here's our arrow. Pull this down a little bit. Even though the stochastic is heading downward, right? We see it, we see it, we see it. It's heading downward. The blue and the red line, they're heading down. But guess what? We have a green candle right here. So even though the stochastic is heading down, we would not enter that trade because we have a green candle. So we will wait until a red candle would appear with the stochastic pointing down before we would enter that particular trade. Now, once we entered the trade, we would go back to the 15th. So say I entered the trade after I saw the red candle appear on the 1-hour. So I moved my arrow over to where the red candle appeared. I'm going to go back to the 15-minute chart. If we would have entered our trade here, then you want to place your cursor above the PSAR, look to the left, and that is where you would have set your stop loss. So it would have been around this area that I would have placed my my cursor, not touching the PSAR, but above it. You go all the way over to the right, and that stop loss would have been 1.60716. That would have been your stop loss when you decided that you had the good setup to enter the trade. Any questions, comments, any points of clarity? Is the SL the price under, above the PSAR when you entered the trade, or do you use the price under, above the first PSAR? Let's go to this candle here. I'm going to show you where your stop loss would have been. Let's just say this was a perfect setup right here. We're live in the market. We got the blue line crossing over the red, heading upward. We have a green candle with a flat bottom, and we have a PSAR underneath the candle, right? I'm going to put my cursor under the PSAR. The PSAR that appeared under the candle with the flat bottom. Not gonna touch the PSAR. I'm gonna put my cursor under the PSAR. I'm looking now to the right, and the price that's in the gray, charcoal gray rectangle, 1.60174, that is the stop loss. So that is what you would type into your MetaTrader 4 on your red line as your stop loss. If you were selling, say you entered the trade here for a sale, you would put your cursor above this PSAR, which is above the red candle with the flat top. You would look over to the right at price. It's 1.60890. That would be your stop loss if you were entering this sale. All right, how do you move the stop loss into profit to break even? That's an advanced question for Thursday nights. We're gonna keep it real simple because when you're going for 10 pips, you really don't need to be moving your stop loss. That's for a longer trade. So that question will be addressed on Thursday. So what we're gonna do is transition into our compounding chart so that everybody can understand how to, what lot size to use when you're taking a trade and where to get that information from. You are welcome. All right, so we're gonna stop the share, go back to our slides. And we are going to look at my favorite thing, which is the compounding chart. All right, so we reviewed the Vibrata. Now we're gonna talk about the 8th wonder of the world. I want you all to look up that song, The 8th Wonder. It's a jam from the 80s. So it's the 8th wonder of the world, compounding interest. It's the 8th wonder of the world. He who understands it earns it. He who does not pays it. So guess what the masses of people are doing every single day? They are paying compounding interest. While we're here mastering compounding interest that comes into our account. So you always want to be a step before or above the masses. All right, here we go. This is our compounding chart. Where do you find this chart? You go to BeYourOwnBankMovement.com, click on files, and you'll be able to download this compounding chart. You have to begin your trading entries by knowing what your lot size is going to be. So you start with the chart. This compounding chart, column A is the number of trades you're going to take. Column B is your beginning balance. So some people may start their account with $50. Some may start with $100, $500, $1,000, $10,000. It doesn't matter. You type in your starting balance here when you're beginning your trading day. And then you want to type in your percentage of growth that you plan on taking from the market. So in the academy, we learned that you want to be very conservative when you're picking this percentage point. So they recommend in the academy 3% or less. But I found a sweet spot with 5%. So that's what I'm going to show you next. But you pick your percentage of growth. This is the amount of money that you will earn when your trade takes profit, when you set a 3% growth rate with a $100 balance. And this is your lot size that you would set for 10 pips and cashing out. So TP stands for take profit, which is 10. This is where we live as a beginner. Your stop loss is going to be determined by the PSAR that I just went over. And then if you were taking 3% profit from the market, you would type this into the MetaTrader 4 as your lot size, 0.03. So when you change this number and you change this percentage and you hit enter, Your lot size is going to change, and that is where you will find what lot size you need to place for every trade by using this compounding chart. So let's skip up to our 5% growth compounding chart with a $500 starting balance, which is the foundation for our 6 figures in 6 months. So I want you all to just drop 6 in the chat. Just one of them though. We just want 1 6. Okay? Because we are on our way to 6 figures in 6 months. We start with a $500 balance. We use 5% as our growth, our profit. And then our first lot size that we would key into our MetaTrader for would be 0.25. Now let's look at what will happen in 6 months to 6 figures when we just focus on the perfect setup. I just went over how to identify a perfect setup, how to identify the proper stop loss for a buy or a sell. So after 6 months, y'all, with just taking 1 trade a day, 5 days a week, just 1 trade a day. Remember, the less time you spend in the market, the better your odds. So 1 trade a day, we can all do that, right? It's when we begin to chase the trades that we end up in trouble. So after a 6-month period of time, just taking 1 trade a day, 10 pips cashing out, your account would end up being $174,455. You withdraw that 6 figures, boom, we got a great testimony. People will be flocking to BYOB with those kind of testimonies. So we want to make sure we do it in grand style. Then after 12 months, guess what? 8 figures in your account. Now, what if we get this all half right? Would it be okay to get to $50,000 in 6 months and in 12 months get to 6 figures? Absolutely. Why? Because we will be representing the minority of money earners in the entire world when we all have a testimony that we earned 6 figures in 12 months. So you want to take this seriously. We are creating history. We are breaking the chains. We're breaking generational curses of poverty and lack and mediocrity with this 6 months to 6 figures campaign. So if you all are excited, I want you to drop another 6 in the chat. If you're excited about being able to be empowered and equipped with a tool, a strategy, a simple technique to get to 6 figures in 6 months, go ahead and drop another 6 in the chat. Absolutely. We can also compound with HFX, and we have 3 minutes left. Just know it's the same concept. Understand this compounding sheet is a little bit different. You have your starting balance, and then you do have your percentage of profit here. So with a $500 balance, you're not going to type in a lot size of 0.25. You're going to type in $25 on the trading platform that we use for binary options. And then you can choose the percentage of profit that you're going to be able to realize when you look at the assets that are available when you're trading. Sometimes they're at 90%, 92%, 40%. This example is when you just focus on those assets that have at least 80%, then you can compound your way to 6 figures in 7 months with binary options. So in the beginning, you're going to take profit. It's going to begin slow, but it will increase with your skill set. When your skill set increases, your patience increases, your discipline increases, so will your trade account. So we're going to ride the wave of the market. We're going to be dropping 777s in the chat 24 hours a day, 7 days a week. Why? Because money does not sleep. So we want you all to get your phones out. Why? Because we want you to understand how to stay plugged in so you can stay turned on. Here are the resources that have been provided by our dream team. We have our beautiful website, BeYourOwnBankMovement.com. You want to go there, watch the videos, watch the testimonies, shop for paraphernalia. We were at a restaurant here in Milwaukee, and our partner is Mr. Rogers. He always is BYOB from head to toe. So we sat down at a restaurant, and a gentleman across the table said, "Be your own bank." And the rest is history. He invited himself to learn about the movement. And so you want to make sure you represent BYOB wherever you go. Shop now, get your t-shirts, get your hats, get your paraphernalia, your sweatsuits, your slides, everything BYOB. And then you want to subscribe to our YouTube channel, Be Your Own Bank Movement. And if you want to type it in specifically, it's youtube.com/C/BYOB challenge. And then you want to make sure you're part of our text group. So take your phones out, get your messenger up, and type in 904-567-0634 as though you're going to send a text message. And you want to text BYOB cash out to that number so that you receive the daily text messages from our leadership team. And then on Telegram, you want to download the Telegram chat. And then you want to join our chat room. And to do so, it's t.me/BYOB cash out. Make sure you stay plugged in and enrolled in the Academy. Professionals who make big money are committed to continuous education. The Academy represents that for us, and it houses the tools that we need in order to succeed. So you always want to be subscribed to the Academy, and then always show up for the Zoom events. We have 40 events per month. You cannot fail if you stay plugged in. Then we have trips and pips. There are things that you can do to qualify for restaurant certificates, things you can qualify for hotel stays and getaways, just for perfecting your skill. So because of the sake of time, we're going to keep moving. But if you want more information about trips and pips and how you can qualify for these rewards, let your leadership team know. What will it take? Movement. When the market moves, you move. What will your legacy be? You're going to be known for 6 figures in 6 months and beyond, and create the life that you truly desire. And remember, our vision is 2 million families financially impacted, educated, and empowered by March 28th, 2022. Let's go, y'all. BYOB worldwide. Enroll, learn, and profit. And with that being said, it is my privilege